Hey YouTube, I'm Jimmy. In this video, I'm going to go through some of the top value stocks that I found that also have really good dividends, and I think they could have a really solid 2019. Now, as I usually do in these types of videos, is I spread the picks of the different stocks amongst different sectors to try to diversify a bit and give us some options. So in order to make this list, I looked for stocks that had a few features. First, they were high quality companies and they had a decent yield. And finally, I wanted that company to be trading at a lower forward PE currently than its 5-year average. So that was the basis of the criteria I created. So let's look at our first company. Our first company is SunTrust Bank, ticker symbol STI. SunTrust is a regional bank, and STI is a solid dividend stock because it has a dividend yield of about 3.6%. And it's also a good value stock since the stock took a nosedive back in December. Here's what the STI chart looks like. And as we can see, it's already begun to recover from its low. Now, I wouldn't be surprised if STI stock kept drifting higher throughout 2019 as it moves closer to its historical PE average from the past 5 years. Okay, so based on where the stock is right now, their current forward PE ratio is about 10x. And that looks pretty good when we compare it to the 5-year average, about 14x. Now, if SunTrust stock were to move back to its 5-year average, that would have it trading at about $81 a share. I think that it has the possibility of doing that through 2019. Our next value stock is Air Products and Chemicals, ticker symbol APD. APD is in the materials sector. And basically, what they do is they sell a ton of different products to a ton of different industries. Products like oxygen, nitrogen, helium to places like hospitals or welding shops. Basically, that's what they do. Now, once again, I think that APD is a good dividend stock because it currently has a dividend yield of about 2.8%, which is decent. And when we look at their forward PE, well, currently they're trading at about 18x, which is, sure, higher than our other stocks, but it's not bad when you compare it to their 5-year average. When we look at their 5-year average is about 20x. Now, APD is a bit different from SunTrust because APD struggled back in 2015 and 2016, and it's now starting to pick up again from a business standpoint. I think APD's stock could end up being a bit more volatile than SunTrust, but I do expect them to do decent in 2018, and in the meantime, they get a decent dividend yield. Now, for our next company, we have Eaton Corp, ticker symbol ETN. Eaton is an industrial company, and what they do is they manufacture products for the industrial sector, the construction sector, commercial sector, and aerospace, things like that. And they've had decent growth when it comes to earnings per share, and analysts are expecting that growth to continue into 2019. I think it's a pretty good dividend stock because they have a dividend yield close to about 3.8%, and they have a really good dividend coverage ratio of more than 3x, which means that they have plenty of earnings to support their dividend and maybe even support an increase in dividends. Now, when we look at their forward PE ratio, we can see that they have a forward PE of about 12x, and this is below their 5-year average of 14x. In fact, if we look at their current price of about $69 per share, if Eaton were to trade at their own 5-year historical average, that would be almost 20% higher than where the stock is right now. So to me, that makes it a pretty good candidate for a value stock. Okay, we're moving along nicely here. Jumping to our fourth company. Our fourth company is Royal Caribbean, ticker symbol RCL. Royal Caribbean is a cruise line company. And when I first came across this company, I was actually a bit hesitant because I've seen some news over the past quarter or two that RCL was facing some cost headwinds when it comes to their business, and I thought that might hinder profits going forward. But the more I researched it, the more I realized that they're also facing increased demand for their products, as well as introducing some new technologies, specifically regarding they have a location-based app and other things like that have really been helping their business. Overall, the more I researched, the more I was impressed by it. And that's before we get to their 2.7% dividend yield and an earnings per share chart that looks like this going back to 2012. Now, personally, I would have thought that a stock that was growing earnings per share like that, well, I would have expected them to trade at a premium. Instead, they appear to be trading at a discount to their own historical average. Now, when we look at their current forward PE ratio, they're trading at about 11x right now. Compare that to their 5-year average of about 14x. Now, one thing I think it's important to point out is that one of the reasons that RCL has been able to grow their earnings per share like that is that it's because they've been able to improve margins consistently over the past few years. So that really helps grow earnings per share. But the downfall with that is you can only grow margins so far. Eventually, margins will hit a peak. But that being said, RCL stock doesn't seem to be reflecting the fact that their business is improving. Their margins are improving. So I think that as they begin to realize that, and if they simply get back to their 5-year average, even if they don't trade at a premium to it, well, that's 20% higher than their current stock price of about $104. So to me, that makes RCL look like a pretty good value stock in addition to their nice dividend. Okay, now on to number 5. And I just want to point out these companies are in no particular order. I deliberately spread them around so we could all take from it whatever we find is helpful. Now, our number 5 company comes out of the technology sector, and that is Broadcom. Ticker symbol AVGO. Broadcom is a semiconductor company, and they make a lot of different products in the technology segment, and they've been quite popular over the past few years. They're also a great dividend stock since they have a dividend yield of more than 4% at about 4.3%. And I'm not all that concerned about their ability to cover the dividend since they have a dividend coverage ratio of more than 4 times what they're paying out right now, which also implies if they wanted to, they could increase it. Now, when we jump to their forward PE, well, we can see that their forward PE is about 10x compared to next year's earnings. Meanwhile, their 5-year average is about 14x, which means that if their stock were to be trading at their 5-year average or close to it, well, that would be about 30% higher than the current stock price, making AVGO a pretty good value stock in addition to being a pretty good dividend stock. Now, I recognize that I went fairly quickly through each of these companies, and I could easily make a longer video on any one of these companies or on each of them. I didn't want to make this video too long, so I just touched on the highlights. But if you'd be interested in seeing a more in-depth video on any one of these stocks, or all of the stocks, or perhaps a different stock, please let me know in the comments below, and I'd be happy to add it to the list. I'm always looking for new companies to analyze. And I want to thank you for sticking with me all the way to the end of the video. I really do appreciate it. If you haven't done so yet, hit the thumbs up, hit subscribe, and I look forward to seeing the next video. Thank you.